Imagine waking up tomorrow morning. You get dressed, walk to your favorite coffee shop, order a cup of coffee. Then you reach for your wallet. It's empty. You take out your phone. Your banking app no longer works. Your credit cards have disappeared. Cash is worthless. No one accepts it anymore. You look around. People are confused. Stores are closing. Customers are arguing. No one knows what anything is worth. Within a few hours, something extraordinary happens. The world doesn't run out of food. It doesn't run out of water. It doesn't even run out of products. Instead, it runs out of trust. Without trust, trade stops. Without trade, businesses stop. Without businesses, cities begin to slow down. For something we use every day, money is surprisingly mysterious. A small piece of paper can buy a meal. A metal coin can pay for a bus ride. A number on a screen can purchase a house. But why? Why do we believe these things have value? The truth is, money was not invented to make people rich. It was invented to solve one of humanity's greatest problems. Thousands of years ago, before banks, before coins, before gold, before paper money, people still traded, they still worked, they still dreamed of a better life. But every exchange was difficult. Every trade depended on finding the right person at exactly the right time. As human communities grew larger, that system began to fail. And when it failed, history changed forever. What happened next would transform villages into cities, cities into kingdoms, kingdoms into powerful civilizations connected by trade. The history of money is not simply the story of coins, banks, or wealth. It is the story of how strangers learned to trust one another. It is the story of how ideas became more valuable than objects. And perhaps, it is one of the most important stories in the history of human civilization. Today, we will travel across thousands of years, from the first markets where people exchanged goods with their neighbors, to the first shells, the first coins, the first paper money, and finally, to a world where money exists only as invisible numbers moving across digital networks. Along the way, we will discover a surprising truth. The greatest invention was never money itself. It was the trust that gave money its value. So let's travel back to a time before wallets, before banks, before currencies, to a world where trade was possible. But money did not yet exist. Our story begins there. Part 1. When trade stopped working. Long before there were coins, long before paper money, long before banks or credit cards, people were already trading. Imagine a small farming village nearly 10,000 years ago. The morning sun rises over the fields. A farmer has harvested more wheat than his family can eat. A fisherman has caught more fish than he needs. A potter has finished making beautiful clay jars. A shepherd has healthy sheep. Everyone has something valuable, but everyone needs something different. The farmer wants a clay pot. The potter needs fish. The fisherman wants wool for warm clothing. The shepherd needs grain for the winter. At first, this system seems simple. I'll give you this, if you give me that. This is called barter. For thousands of years, barter helped people survive. It allowed families to exchange food, tools, clothing, and many other goods. It encouraged neighbors to cooperate. It helped the first villages grow. But as communities became larger, a hidden problem slowly appeared. Imagine the farmer walking through the marketplace carrying a heavy sack of wheat. He wants a new clay jar. He finds the potter. But the potter smiles politely and says, "I'm sorry, I already have enough wheat. What I really need is fish." Now the farmer must find the fisherman. After searching for hours, he finally finds him. But the fisherman does not need wheat either. He wants a stronger spear. The farmer must continue searching. One trade becomes 3. 3 trades become 5. An entire day passes. And the farmer still has no clay jar. The problem was not that people lacked goods. The problem was that people rarely wanted the same things at the same time. Today, economists call this the double coincidence of wants. The name sounds complicated, but the idea is very simple. For barter to work, 2 people must each have exactly what the other person wants. As villages became towns, and towns became busy trading centers, finding that perfect match became more difficult every year. Another challenge soon appeared. Some goods could not be divided easily. Imagine owning one healthy cow. You want to buy a basket of fruit. How do you pay? You cannot cut the cow into pieces. Doing so destroys its value. Other goods spoiled quickly. Fish became rotten. Fruit dried out. Milk turned sour. Even grain could be ruined by rain, insects, or hungry animals. People needed something that could store value for a long time. Transporting goods created another problem. Imagine walking for several days carrying sacks of grain, heavy tools, or baskets filled with pottery. Long-distance trade was slow, expensive, and exhausting. The more civilization grew, the more obvious the problem became. Trade itself was beginning to hold civilization back. Yet something remarkable was also happening. People were becoming specialists. Some became excellent farmers. Others made stronger tools. Some created beautiful pottery. Others became skilled weavers. This specialization improved the quality of life, but it also increased the need for trade. The more people depended on one another, the more important exchange became. Civilization had reached a turning point. Human beings no longer needed a better product. They needed a better system. They needed something that everyone would recognize, everyone would accept, and everyone would trust. That simple idea would change history forever. Before long, people across different civilizations began searching for one object that almost everyone agreed had value. Not because it was the most beautiful, not because it was the rarest, but because it solved a problem that barter never could. That search would give birth to the world's first forms of money. Reflection. Barter taught humanity an important lesson. People do not become prosperous by producing more. They become prosperous by exchanging more easily. Every great civilization grew stronger because people learned how to cooperate with strangers, not just with their neighbors. Trade was never only about goods. It was always about relationships. It was always about trust. One idea to remember. Money was not invented to create wealth. It was invented to make cooperation possible. Part 2. The first things people trusted. Imagine walking into another marketplace. This time, something has changed. People are still buying, still selling, still exchanging goods. But instead of carrying baskets filled with wheat or fish, many people hold something much smaller. Some carry shiny seashells. Others carry pieces of salt. In another land, people trade with tea bricks. Far away, families measure wealth by the number of cattle they own. Different places, different cultures, different objects, yet they all share one important purpose. They are becoming money. This raises an interesting question. Why did people choose these objects? The answer is simple. Not because they were beautiful, not because they were expensive, but because other people trusted them. Long before coins existed, many societies discovered that trade became much easier when everyone agreed to accept the same object in exchange. These objects became known as commodity money. Unlike modern money, commodity money had value even if no one called it money. A cow could produce milk. Salt could preserve food. Tea could be brewed and enjoyed. Metal could become tools or weapons. Even if trade stopped, these items still had practical uses. That made people willing to accept them. One of the most famous examples was the cowrie shell. These small, smooth shells were found in the Indian and Pacific Oceans. Because they were beautiful, durable, lightweight, and difficult to copy, they spread across Africa, Asia, and parts of Europe. For hundreds, and in some places even thousands of years, people bought goods using shells. Imagine that. A handful of seashells could purchase food, clothing, or tools. Today, they seem ordinary, but long ago they represented trust. Salt was another remarkable form of money. Today, salt sits quietly on our dining tables. We rarely think about it. But thousands of years ago, salt was precious. Without refrigeration, people needed salt to preserve meat and fish. Communities could not survive long without it. Its value became so great that some workers and soldiers were paid with salt. In fact, the English word salary comes from the Latin word salarium, which is closely connected to salt payments in ancient Rome. Money was already shaping language itself. In many parts of the world, cattle also served as wealth. Owning more animals meant greater security, more food, more labor, more opportunities. For some societies, counting cows was almost the same as counting money. Every culture looked at its own environment and asked, "What does everyone need?" The answer became, "It's money." As trade expanded, however, people discovered that even commodity money had weaknesses. Cattle became sick, salt dissolved in water, tea could spoil. Shells were not equally valuable everywhere. Transporting large amounts of goods remained difficult. Civilization was still searching for something better. Then people noticed another material. It did not rot. It did not spoil. It could be divided into smaller pieces. It was easy to carry. And it lasted for generations. Metal. At first, copper and bronze became popular for trade. Later, silver and gold attracted even greater attention. These metals were rare enough to hold value, strong enough to survive for centuries, beautiful enough that people admired them. Yet their greatest strength was something else. People trusted them. Not because kings demanded it, not because laws required it, but because almost everyone agreed they were valuable. This agreement changed everything. For the first time, strangers who had never met could exchange goods with confidence. Trust was slowly becoming independent of personal relationships. You no longer needed to know the farmer, or the fisherman, or the merchant. You only needed confidence that the object in your hand would be accepted by the next person. That simple idea opened the door to a much larger world. Trade expanded beyond villages, beyond kingdoms, beyond borders. Civilization itself became more connected. But one problem still remained. Every piece of metal had to be weighed. Its purity had to be checked. Its value had to be negotiated. Every single time. Trade was faster than barter, but it was still far from perfect. The world was waiting for one more breakthrough. A small invention that could fit in the palm of your hand, yet would transform commerce, kingdoms, and entire empires. That invention was the coin. Reflection. People did not choose money because it was precious. They chose it because it solved problems. Throughout history, the objects changed. The principle never did. Money works only when people believe others will accept it tomorrow. One idea to remember. The first currency was never gold or silver. The first currency was shared trust. Part 3. How coins built empires. Imagine that you are a merchant living about 2,700 years ago. Your wagon is filled with cloth, olive oil, and pottery. You travel from one town to another. Sometimes your journey lasts for weeks, sometimes for months. Every market is different. Every seller values metal differently. Before buying anything, you must weigh each piece of silver. Then you must convince the other merchant that your metal is pure. Only then can the trade begin. Imagine repeating this process hundreds of times. Trade was improving, but it was still slow, still uncertain, still dependent on long negotiations. Civilization had grown larger than its trading system. People needed something faster, something simpler, something everyone could recognize immediately. Around the 7th century BC, in a kingdom called Lydia, located in what is now Western Turkey, that solution finally appeared. Small pieces of metal were carefully shaped into standardized coins. Each coin carried an official mark from the kingdom. That mark changed everything. For the first time, people no longer needed to weigh every payment. They no longer argued endlessly about purity. The government seal acted as a promise. It said, "You can trust this coin." The metal still had value. But now, trust had an official guarantee. This simple invention transformed trade. Imagine walking into a marketplace. Instead of carrying heavy bags of grain or pieces of silver to weigh, you simply counted coins. Buying became faster. Selling became easier. Merchants could serve more customers in less time. Markets became busier than ever before. The idea spread quickly. The Greeks adopted coins. Then many other civilizations followed. Eventually, the Romans developed one of the most sophisticated coin systems in the ancient world. Their coins traveled across Europe, North Africa, and the Middle East. A Roman merchant could trade with people hundreds of kilometers away using coins that were already widely recognized. For the first time in history, money became truly portable. Trade was no longer limited to neighboring villages. It connected entire continents. One of the greatest examples was the Silk Road. Stretching thousands of kilometers from China to the Mediterranean, it became one of history's most important trade networks. Caravans crossed deserts, climbed mountains, and traveled through dangerous lands. They carried silk, spices, glass, paper, jewelry, ideas, religions, and, of course, money. Coins helped make these exchanges possible. But something even more important was happening. Trade was no longer exchanging only products. It was exchanging cultures. A merchant might leave one city speaking one language. Weeks later, he would arrive in another civilization with new knowledge, new customs, and new ideas. Commerce became one of humanity's greatest teachers. Coins did more than build markets. They built connections. Governments also discovered another advantage. Coins helped collect taxes more efficiently. They allowed soldiers to receive regular pay. Large construction projects became easier to organize. Roads expanded. Ports became busier. Cities grew larger. Strong economies helped create strong states. In many ways, coins became the invisible foundation beneath powerful civilizations. Yet coins also revealed an important truth. Their value did not come only from gold or silver. It came from confidence in the authority behind them. If people trusted the government, they trusted its coins. If that trust disappeared, even precious metal could lose part of its power. History offers many examples. Some rulers reduced the amount of silver in their coins while keeping the same appearance. At first, few people noticed, but eventually, merchants realized what had happened. Confidence declined, prices rose, trade became more difficult. The lesson was clear. When trust weakens, money weakens. This lesson has never changed. Even today, economies depend not only on wealth, they depend on confidence. Coins also changed the way people thought about value. Instead of measuring wealth only through land, animals, or harvests, people could now save wealth in a small pouch. Opportunity became easier to carry. Investment became easier to make. Business became easier to expand. The world became more connected than ever before. For centuries, coins dominated trade. They helped kingdoms become empires. They helped empires connect continents. But as trade continued to grow, another challenge appeared. Merchants were becoming too successful. They were carrying so many coins that money itself became a burden. Once again, civilization needed a better idea. And once again, that idea would change the world forever. An Akrak reflection. Coins did more than simplify trade. They allowed trust to travel farther than people ever could. For the first time, strangers from different cultures could exchange value without first knowing one another. Civilization expanded because trust became portable. One idea to remember. Coins changed commerce. Commerce changed civilization. Part 4. When money became an idea. Imagine you are a successful merchant during the Song dynasty in China. Your business has grown. You travel from city to city, buying silk, tea, porcelain, and spices. Your customers are everywhere. Your profits are increasing. But success has created a new problem. Your money has become too heavy. Every journey begins with bags of bronze coins, hundreds of them, sometimes thousands. The coins are so heavy that they require carts or extra workers just to transport them. The roads are long. Bandits hide in the mountains. Every trip carries risk. One robbery could destroy years of hard work. Merchants needed a safer way to carry their wealth. Once again, human civilization had reached another turning point. Instead of carrying coins everywhere, some merchants began leaving their money with trusted businesses. In return, they received a written receipt. That small piece of paper represented the value of the coins stored somewhere else. At first, these receipts were used only by a few traders, but people soon noticed something remarkable. The paper itself could be exchanged. Instead of collecting the coins, another merchant simply accepted the receipt. Trade became faster, safer, and far more convenient. During the Song dynasty, around the 11th century, China developed the world's first widely used paper money. It was one of the most revolutionary ideas in economic history. For the first time, money no longer needed to be made from something valuable. It only needed to represent value. Think about how extraordinary that idea was. A simple sheet of paper, almost worthless by itself, could purchase food, land, homes, even entire businesses. Why? Because people trusted the promise behind it. The value was no longer inside the object. The value existed in human belief. As trade expanded across Asia, the idea of paper money slowly spread to other parts of the world. Centuries later, Europe began developing banking systems that transformed commerce once again. Banks became places where people could safely store wealth. Instead of hiding gold beneath the floor of a house, merchants could deposit it in a secure building. Banks recorded the amount, issued receipts, transferred payments, and eventually allowed people to borrow money to start businesses or expand trade. Money was becoming something much more powerful than coins. It was becoming a system. With stronger banks came stronger economies. Governments also realized they needed institutions to manage the nation's money. Over time, central banks were created. They helped issue currency, support financial stability, and build public confidence. The success of an economy increasingly depended on one invisible force: trust. The Industrial Revolution accelerated this transformation. Factories produced goods on an enormous scale. Railways connected distant cities. Steamships crossed oceans. International trade expanded faster than ever before. The old world of carrying bags of coins could no longer support a global economy. Paper money, banks, and financial institutions became essential. A businessman in London could send payment across Europe without transporting a single chest of gold. Money had become lighter. Trade had become faster. The world had become smaller. Yet this new system also revealed an important truth. Paper itself had almost no value. If everyone suddenly stopped believing in it, it would become nothing more than ink on paper. The same was true for every banknote in history. Its true worth came from confidence. Confidence that others would accept it tomorrow. Confidence that governments would protect it. Confidence that the economy behind it remained strong. The physical form of money had changed. Its foundation had not. Civilization was learning a remarkable lesson. The less valuable the material became, the more valuable trust became. Then, near the end of the 20th century, another revolution quietly began. People started using plastic cards instead of paper. Soon after, computers connected banks across the world. Then came smartphones. Today, billions of dollars move every second without anyone touching a single coin or banknote. Money is becoming increasingly invisible. But the invisible force behind it has never changed. Trust. Reflection. The history of money is not a story about paper replacing metal. It is the story of confidence replacing weight. The easier money became to carry, the more important trust became. One idea to remember. Money became invisible. Trust became everything. Part 5. What will we trust next? Imagine a 12-year-old child walking into a small cafe today. She orders a sandwich and a drink. When it's time to pay, she doesn't take out a wallet. She doesn't count coins. She doesn't unfold paper money. She simply taps her phone. A second later, the payment is complete. No gold changed hands. No paper changed hands. No one even saw the money. Yet both the customer and the cafe owner smile and continue their day. To us, this feels completely normal. But if a merchant from ancient Egypt, a trader from the Silk Road, or even a banker from 200 years ago could witness this moment, they would be amazed. Money has changed more in the last few decades than at almost any other time in history. Today, much of the world's money exists only as digital information. When you receive your salary, you rarely hold it in your hands. When you buy something online, no physical object is exchanged. Instead, numbers move securely between computers in different parts of the world. In many countries, millions of people now use digital wallets, online banking, and contactless payments every day. Money has become faster than ever before. A payment that once required days of travel now takes only seconds. International businesses can pay employees on different continents instantly. Families can send money across the world with a few taps on a screen. Trade has reached a speed our ancestors could never have imagined. Yet every new invention brings new questions. Can digital systems always be trusted? How do we protect people's money from cybercrime? Who controls digital currencies? What happens if technology fails? As these questions grow, new ideas continue to emerge. One of the most discussed is cryptocurrency. Unlike traditional money issued by governments, many cryptocurrencies operate on decentralized computer networks. Supporters believe this creates greater independence. Critics argue that prices can change too quickly and that risks remain high. Whether cryptocurrencies become a larger part of everyday life or not, they have already changed one important conversation. They have forced the world to ask, what gives money its value? At the same time, many governments are exploring central bank digital currencies, often called CBDCs. These digital versions of national currencies may become part of the financial systems of the future. Artificial intelligence is also beginning to transform banking, payments, and fraud detection. Technology continues moving forward at an incredible speed. But beneath every innovation, one truth remains unchanged. Money has never worked because of technology alone. It has always worked because people believe it will. Think back to the beginning of our journey. The farmer carrying wheat, the merchant accepting cowrie shells, the trader counting silver coins, the banker issuing paper money, the customer tapping a smartphone. The objects have changed. The belief has not. For more than 5,000 years, every generation has reinvented money, not because people wanted something new, but because civilization kept asking for a better way to cooperate. Perhaps that is the greatest lesson in the history of money. Money is not a destination. It is an idea that continues to evolve with human society. No one can say with certainty what money will look like 100 years from now. Perhaps it will exist entirely in digital form. Perhaps new technologies will replace today's systems. Perhaps we will invent something we cannot yet imagine. But whatever happens, the future of money will never depend only on faster computers or smarter technology. It will depend on whether people continue to trust one another. That has always been the true currency of civilization, and it always will be. Take a reflection. Every generation has changed the form of money. No generation has changed its foundation. Civilizations grow stronger not because money becomes more advanced, but because trust becomes stronger. Mahao. One idea to remember. The future of money is not built on technology. It is built on human trust. At the beginning of this journey, we asked a simple question. Why does money have value? Thousands of years later, after traveling through ancient villages, crossing the Silk Road, walking among merchants, kings, bankers, and modern cities, we finally have our answer. Money has never been valuable because of what it is made of. A cowrie shell is only a shell. A gold coin is only metal. A banknote is only paper. A number on your phone is only data. None of these things can feed you by themselves. None of them have magical power. Their value comes from something invisible, something every civilization has depended on. Trust. When two strangers agree that something has value, trade becomes possible. When millions of people share that same belief, an economy is born. When entire nations protect that trust, civilizations flourish. The history of money is not really the history of wealth. It is the history of cooperation. It is the story of how human beings learned to work with people they had never met. Without money, a village remains a village. With trusted systems of exchange, villages become cities. Cities become kingdoms. Kingdoms become civilizations. Money did not build the pyramids. People did. Money did not write the first laws. People did. Money did not create civilization. It gave civilization the ability to grow. And perhaps that is the greatest lesson this journey has taught us. Every great invention in history solved a human problem. The wheel helped us move. Writing helped us remember. Agriculture helped us survive. Money helped us cooperate. As our world becomes increasingly digital, it is easy to believe that money is becoming more complicated. In reality, its most important principle has never changed. Whether we exchange shells, gold, paper, or digital numbers, we are always exchanging trust. That invisible connection has linked farmers, merchants, explorers, inventors, entrepreneurs, and families for thousands of years. It continues to connect us today, and it will continue to shape the future long after today's technology becomes history. The next chapter of money has not been written yet. Perhaps it will be created by new technologies, perhaps by new ideas, or perhaps by a new generation willing to rethink how people exchange value. But whatever the future brings, one truth will remain. The greatest currency in human history has never been gold. It has always been trust. Thank you for joining me on this journey through the complete history of money. If you enjoyed this story, please like this video, subscribe to the channel, and join us as we continue exploring the ideas that shaped our world. Because every civilization leaves behind more than monuments. It leaves behind lessons, and every lesson helps us understand not only our past, but ourselves. Until next time, keep asking questions, keep learning. And remember, history is not only the story of what humanity created, it is the story of why humanity created it.